What you're looking at right now is the exact moment the investment world flipped upside down. While everyone was buying AI stocks at 50 times revenue, something much bigger was happening in the shadows. I'm about to show you a $145 trillion opportunity that 99% of investors won't even know exists. And by the end of this video, you'll understand why the smartest money on Wall Street is quietly moving billions into an asset class that most people think is boring. But first, let me ask you something. How much money did you make in the stock market last month? Be honest, because while you were probably losing money or breaking even, institutional investors made $21 billion in one quarter from an investment strategy so simple, a 12-year-old could understand it. This isn't crypto. This isn't some new tech startup. This is something that's been around for thousands of years. But 2025 has created the perfect storm that could make early investors incredibly wealthy. Here's what's crazy. Right now, as I'm recording this video, 46% of the world's largest investment institutions are increasing their allocations to this asset class. When was the last time 46% of Wall Street agreed on anything? These aren't retail investors on Reddit. These are pension funds managing trillions, sovereign wealth funds, the people who manage money for entire countries, and they're all moving in the same direction at the same time. Now, I could just tell you what this investment is right now, but if I did that, you'd probably click away and miss the most important part, which is why this is happening, and more importantly, how you can position yourself to profit from it starting this week. Because what I'm about to show you involves 5 specific investment strategies, 3 major economic trends that are converging right now, and 1 prediction that could make the difference between retiring comfortably or working until you're 80. In the next 5 minutes, I'm going to show you exactly what this $145 trillion opportunity is, give you the specific ticker symbols and allocation percentages I'm using, and most importantly, explain why this window of opportunity won't stay open much longer. I'll also reveal the 3 major mistakes that could cost you hundreds of thousands of potential gains, and the exact step-by-step action plan you can implement starting tomorrow with as little as $100. But here's the thing, everything I'm about to share becomes worthless if you stop watching now. Because the devil is in the details, and the difference between making money and losing money comes down to knowing which specific investments to buy, when to buy them, and more importantly, which ones to avoid. Because what I'm about to show you starts with a number so big, most people's brains can't even process it. The $145 trillion physical assets revolution that Wall Street doesn't want you to know about. Stop. Before you put another dollar into overvalued tech stocks or bonds getting crushed by inflation, I need to show you something that could completely change how you think about wealth building. While everyone's been fighting over the same overcrowded investments, a massive $145 trillion asset class has been quietly setting up for what could be the biggest wealth transfer in modern history. And here's the crazy part. 99% of retail investors are completely missing it. I'm talking about physical assets. And this isn't just your grandfather's gold advice. This is a complete pattern shift happening right now in 2025 that could make early investors incredibly wealthy. The shocking numbers that will make you question everything. Here's what blew my mind when I saw the latest institutional data. Global private markets are targeting $6.5 trillion per year by 2050 for clean energy infrastructure alone. That's bigger than Japan's entire GDP. But here's where it gets crazy. Global gold ETFs just saw $21 billion in flows during the first quarter of 2025, the second highest quarterly level in history. Gold broke the $3,000 barrier for the first time ever in March 2025. And get this, 46% of institutional investors want to increase their infrastructure allocations over the next 12 months. When institutions agree on anything, you should pay attention. Here's another mind-blowing stat. Global trade grew to $33 trillion in 2025, spurring massive investments in infrastructure. Retail electricity sales increased 2% in 2024 after 15 years of flat growth, driven by data centers and AI computing. The 5 major physical assets problems and all solutions. Let me address the biggest objections to physical assets investing and give you multiple solutions for each. Problem number 1, physical assets are too complex. Solutions: beginners start with VNQ, Real Estate ETF, or IAU, Gold ETF. one-click diversification. Growth seekers. Ring. Gold miners ETF returned 40% year-to-date versus 20% for physical gold. Income lovers. REITs like SCHH average 3 to 4% dividends while appreciating. Tech fans. Data center REITs combine real estate with AI growth. Problem number 2. Storage is a nightmare. Solutions. Gold. ETFs like IAU backed by physical gold in bank vaults, zero storage costs. Silver. SLV ETF gives exposure without touching physical metal. Real estate. REITs eliminate property management and tenant issues. Commodities. Futures ETFs like CPER provide exposure with zero physical handling. Problem number 3. Entry costs are too high. Solutions. Fractional shares. Buy $10 worth through Fidelity or Schwab. ETF access. $100 gets commodity basket exposure through DJP. Dollar cost averaging. $50 a month instead of $50,000 up front. Micro investing. Stash, Acorns offer exposure for spare change. Problem number 4. Too volatile and risky. Solutions. Diversification. Spread across 4 to 5 different physical asset classes. Time horizon. 5 to 10 year holding period, smooth volatility. Position sizing. Start with 5% allocation, increase gradually. Monthly averaging. Reduces timing risk by 70% historically. Problem number 5. Tax complications. Solutions. ETF structure. Most taxed are regular capital gains, not collectibles. IRA placement. Hold in tax-advantaged accounts. Tax loss harvesting. Use GLD or IAU for tax swapping. Professional help. Advisor consultation pays for itself. The institutional money flow that changes everything. Here's what's happening behind the scenes. If global gold ETFs post 150 to 160 tons of inflows in 2025, that represents a 400-ton increase in demand growth from 2023. Nearly 50% of institutions report being under-allocated to real estate in 2024. When institutions are under-allocated, massive money flows follow. Total global assets under management are hitting $145.4 trillion in 2025. When that money chases physical assets, prices move fast. Infrastructure allocations tell the same story. While target allocations remained at 10.8% in 2024, 39% of institutions now invest in REITs, up from prior years. This represents hundreds of billions in new institutional money. The 4 physical asset plays that could make you rich. Play number 1, the gold ETF strategy. Core holdings, IAU, low fees, GLD, liquidity. Advanced play, Ring, miners ETF. 40% year-to-date return. Target, experts expecting $3,500 per ounce in 2025. Play number 2, the silver contrarian bet. ETF, SLV for simplicity. Thesis, sentiment at rock bottom, best contrarian opportunity. Upside, silver outperforms gold during bull markets. Play number 3, the infrastructure revolution. Broad exposure, VNQ, SCHH for diversified REIT exposure. Growth catalyst, AI and cloud computing driving data center demand. Income, REITs distribute 90% of taxable income. Play number 4, the uranium stealth play. ETFs, URA, URNM. Story, 100% price gain in 18 months after decade bear market. Catalyst, nuclear reactor takes 7 to 10 years to build. Predictable demand. The exact allocation strategy. Here's the specific strategy based on historical data. 5 to 10% gold ETFs, IAU for fees, GLD for liquidity. 2 to 5% silver, SLV primarily. 10 to 15% real estate infrastructure, VNQ, SCHH, individual REITs. 2 to 3% commodities, uranium, CPER for copper, URA for uranium. Historical data shows 10 to 20% precious metals allocation significantly outperforms during corrections. Your complete action plan. Week 1 starts. First, open a brokerage account in Fidelity, Schwab, zero minimums, anything. Number 2, 5% allocation to VNQ, broad real estate. Third, 3% to IAU, core gold position. Number 4, set up $100 to $200 a month automatic investing. Month number 1, expand. First, add 2% SLV, silver exposure. Second, 1% CPER, copper for infrastructure or AI. Third, 1% URA, uranium speculation. Fourth, VGSLX for international real estate. Month 3, optimize. First, quarterly rebalancing. Second, move to tax-advantaged accounts. Third, add mortgage REITs, NLY, AGNC for 8 to 12% yields. Number 4, increase during market fear. 59 is greater than 30. Risk management. Never exceed 25% total allocation. Maintain 6-month emergency fund. Use stop losses on speculative positions. Review quarterly, not daily. Bold predictions for 2025. Based on institutional flows and supply-demand analysis. First, gold hits $3,500. Multiple analysts targeting this based on institutional demand. Second, silver outperforms gold by 50%. Historically catches up during bull phases. Third, infrastructure ETFs surge, 25 to 30%. New cycle beginning across real estate sectors. Fourth, uranium doubles again. Nuclear expansion driving unprecedented demand. Why this opportunity won't last? Record central bank buying and institutional under-allocation are creating supply-demand imbalance. When $145.4 trillion in assets starts chasing limited physical resources, basic economics takes over. The smart money managing pensions and sovereign wealth funds is already positioning. They're not making these moves on speculation. They see fundamental shifts that are going away. Physical asset markets are relatively small compared to stock and bond markets. When institutional money flows in, prices can move 50 to 100% quickly. The bottom line, physical assets aren't just hedges anymore. They're positioned to be primary wealth generators for the next decade. Returns may significantly outperform stocks while providing stability during crises. You have two choices. Follow the smart money positioning now or keep fighting over overvalued stocks while the biggest wealth transfer happens without you. Don't wait for CNBC or financial advisors to catch on. By then, easy money is made. Institutions with $145 trillion are moving now. The infrastructure rebuild, energy transition, and monetary debasement create perfect storm for physical assets. This isn't speculation. It's following institutional money flows and supply-demand fundamentals. Time to position yourself is right now, while these opportunities still exist. What physical asset strategy are you implementing for 2025? Comment below and share your approach. This is educational content only, not investment advice. Always research and consult qualified advisors before investing. Please like this video and subscribe if you want more content like this. And let's dive into the opportunity that Wall Street doesn't want you to know about. Here's to your investing success. Profitable investing.